Good afternoon and welcome to BizTech Asia's Midday Market Watch. It is Monday the 27th of May, a UK holiday today, I believe, spring bank holiday, and also a US holiday. I'm joined today by Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank in Singapore. Vishnu, as ever, welcome to the program.
Thanks, Jeff. Great to be here.
Now, as ever, we'll start the show with looking at the price action on Asia-Pacific equity markets, and then we'll get Vishnu's thoughts on that. Today, it's actually been quite a positive day across the region. The Nikkei 225 is up 0.43%. Shanghai Composite is higher by 0.35%. And Hong Kong, the Hang Seng is 3.7% higher, with the ASX 200 in Australia climbing 0.8%, the star of the day. In South Korea, the Kospi is up 0.54%, and in Singapore, the STI is up 0.13%. Kuala Lumpur is lagging today. The KLSE down 0.01%, almost unchanged effectively. Vishnu, what are your thoughts on today's price action?
Well, it does look like we've run into a little bit more of an accommodative patch here. The US data that were out on Friday, where your University of Michigan consumer sentiments, the revisions were a little bit more positive for sentiments, a bit less hawkish in terms of inflation expectations revised down. So you arrived at a bit of a Goldilocks type of scenario that allowed markets to regain some traction on Friday. I think that's a spillover of that momentum. Apart from that, you also still have got China positives. They're still being felt because markets are by and large still fairly optimistic that the plan to rescue the property sector, that's gaining a little bit more of traction. There is a tried and tested plan from Chengzhou that can be applied a little bit more widely across. Although the caveat is, it still is premised on those plans being scaled up with a host of other conditions. But for now, I think markets are happy to go with the backstop that's been provided for them, and that's also coming against I guess a backdrop of heading into June, where perhaps they'll start to see rate cuts from some global central banks, the ECB included.
Right, we'll circle back to China in a minute because I do have a question with you about this one. But let's stay with the United States for the moment. As you said, US consumer inflation expectations did come down on Friday, and it's clear to me that the markets are desperate to price in Fed rate cuts on the whim of or the whiff of any hint of good news, particularly on the inflation front. Is it a case, though, of going not so quickly, please? Because we do have US GDP out on Thursday, and more importantly, I believe we have US personal consumption and expenditure data due on Friday.
No, I mean, you make I think that the case that the Fed is trying to convince everyone, because the host of speakers coming out of the Fed have primarily said it's a great start, it's not enough, we need to see a lot more data. Essentially, they're saying, look, one swallow a summer does not make. And so some of them have even expressly pushed out rate cut possibilities and the window to Q4. So yes, it is certainly a case of, holding our horses on when the US is going to get started. And I think what complicates this further is there are many ways to skin this cat. And it really depends on exactly what aspect of inflation you have to read into to see what you need to be relieved about or what you need to have reservations about. And between the two, there's simply no instant gratification here.
Right. Okay. So perhaps we're going to see a bit more two-way price action this week as markets bounce between comments and data. Vishnu, let's turn to China now. You mentioned it briefly before. Industrial profits rose by 4.3% this morning, which has set a fairly positive tone in mainland China markets today. And as you said, President Xi seems to be making all the right noises about supporting the economy ahead of the plenum. But what's caught my eye this morning was the G7 comments that have come out this weekend. And they're making an awful lot of noise about China's excess export capacity and dumping of products and protecting their industries, etc., etc. We've already seen the US take quite firm action on this front with tariffs already. I mean, protectionism does seem to be on the rise, and we can assume that China will do the same if tariffs are clamped on them. Should we be tempering our optimism here on a China recovery?
I mean, I really like the way you framed it, which is tempering optimism, and I think that's surely a case for that, whether it's based on pure prudence or it's based on the fact that, as you said, there are two sides to this. So just because we're not falling off a cliff doesn't mean we've emerged from the woods, and that I think remains the case with China. Some relief about backstop in the property market. So the way I would frame it is there are hopes that the domestic demand function in China will stop spiraling down into a tailspin. But does that negate growing geopolitical risks on the external front? Certainly not. That's a front that we need to watch. The hope here is because China realized that there are pre-existing fragilities, they would be a little bit more reserved about going out swinging in terms of tit-for-tat tariffs. And the proof of that pudding would be if we get to see more dialogues, more compromises. But you are, I think, on the money to point out that there is every risk of escalation, and hence, getting too excited too soon is just setting ourselves up for a correction somewhere down the road.
Let's talk about India now. It seems it's going quietly under the radar at the moment with the press headlines elsewhere, but they are midway through I think it's a 6-week election cycle for the voting for the next government. Prime Minister Modi seems to have staked his tent, so to speak, on growth, of course, and huge infrastructure investments. From what I can tell, maybe some of the voters just aren't quite as enthusiastic as he is. He is a politician after all. What is your outlook for India's growth at the moment, and perhaps also the outlook for the Indian rupee?
No, those are really good points that you made. On the first, which is the election cycle, I think clearly amongst the infrastructure, nationwide air conditioning isn't one of them. And in this heat wave,
absolutely, yes.
In this heat wave, that's going to affect voter turnout. So it also means there is what he needs to contend with is the possibility that he would not get the type of sweeping majority he needs to just rubber stamp all of his policies. So that's just one aspect of it, and I'm overplaying that risk. But clearly, on the front of growth, I think headline numbers are really very flattering, because the 8.5% growth rate that we have been treated to over the last 3 quarters of releases, although the upcoming one will be moderated on base effects, that I think is contingent on too many assumptions, and one of it is GDP deflator of say 1.5%. India's inflation is certainly not that low, so which means growth may be coming across a lot stronger than the underlying fundamentals are, apart from the number being overstated, the K-shaped recovery. The good news is the infrastructure spending is quite real. And what we need is for the public sector spending to then induce private sector investments to come through and create some multipliers. But we're some way off. And I think I'll go back to the very first point that we made, which is, and although that's with regards to the Fed, the point here is there's no instant gratification. It's a job that needs doing over some time, and in the interim, India is just as prone to downside risks from the global cycle that will include the rupee. So the rupee has been outperforming, some of it on election and political premiums that have been applied to it. There's every risk that if the dollar remains very dominant, there could be some pushback to some of the strength we've seen in the rupee. But the bigger case for the rupee to be a relatively middle of the road performer remains quite intact. We don't expect it to, spiral down to all the way to the bottom of the pile either.
Right. Okay. That actually perversely may be just what the Reserve Bank of India would like. Not too strong, not too weak. A Goldilocks scenario. Vishnu, thanks very much today for your insights.
My pleasure. Thanks, Jeff.
Always a pleasure having you. We've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank here in Singapore on BizTech's Asian Midday Market Watch. I'm Jeffrey Halley, and this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms, as well as our syndication partners, TV stations, radio stations, and websites. Remember to like and subscribe. Thanks for tuning in today.